Hi guys, I have been trading gold EU USD and that of GBP USD. You know what? Gold has been quietly destroying my account. Every bit of profit that I made on the Forex pairs, gold will take it right back. So I will be stopping gold for now. And as we all know, somebody starting out, you don't need to start with thousands of pairs. I only stick with three. So I was trading, for example, GBP USD, and you see usually when I come to the chart, this is what I expect. I go to the higher time frame. So on the higher time frame, we have right recently took out this low here. As it took out this low, we see that here this was the lower low, and then price pulled back and eventually came down to take out this low. But once price took out this low, what am I expecting? I will start to trade as price begin to pull back, and then I will not jump into any structure. I will start to trade the internal structure. So this here was the internal structure. Okay, price move here, came down, took out the structure. So I'll be expecting price to come back, take out this internal structure. Then I'll look in for price to come down, listen in the middle, and then give me some nice chalk. Okay, give me some nice chalk like this. Then I'll come back here and then take my entry to target here. This is my expectation as a beginner. Okay, and this is GBP USD, which by the way was doing good. This is Euro USD, which is the pair that I really like the most. Why? Because it usually give me a clean setup. The volatility in this is not really much, and this is the pair that really helped me to build my account. So just imagine, price came back and took out this low. We have seen that price pull back, took out this low, right? And then this was the lower low. This is the lower low. Price came down and took out this lower low. Exactly right. So what I expect, I'll start to trade the internal structure until we get to this supply zone. Then I'll be looking in whether price will continue to move up or price will continue to move down. So to start with the first internal structure, this was the internal structure. So I expect price to take out this. Once price took out this, then I'll be planning to trade within the middle, this demand zone. And this was a nice setup. Price pulled back and mitigated here. But before then I have to check, is it within my time frame? So let's say price will mitigate this demand zone. So what time? That is 7 o'clock in the evening. So by then, that is not my trading time. So I will not take this trade because it's out of my trading time. So once it's out of my trading time, but this made my setup. This is a correct setup for me, that if I jump in on this trade and follow my entry plan, I think definitely I should be able to get something out of it. And now this look clean. So price came back, took out this low. Then I was like, okay, something is happening here. Let me wait and relax. Euro USD is a clean setup. Price action is always moving clean. Then I expect price to pull back and take this. So this is look clean. So I can be looking to follow my rules to see if I can get an entry. This look clean. We all know it look clean. Now let's come back to where the mess is. This is gold. This is how gold is. I expect gold to come back. Gold pulled back and took out the same lower low. This low, it pulled back and took out this. Then I expect price to give me my first internal boss. You see that I gave a pullback. This is the higher high that I'm expecting gold to take out, and nicely gold pulled back and took out this higher high that gave me a break of structure. So what do? Either I'll set my demand zone here and then set another demand zone here, but I will use this first demand zone as what? As a liquidity to this second last demand zone. So I'll be expecting to see if everything met, then I'll take an entry here. It pulled back and then quickly take me out. Here is the problem. Everything that I have built up on the Forex pairs, EU USD, for example, it has been a good pair for me. Gold will come and take it all or destroy all the profit. For example, let me take you through one of the trades that made me to make the decision that I am going to take gold out of my watch list. So let's start from the daily time frame. Whenever I come to the market, I looked at the daily time frame. What is price actually on the daily time frame? So you see here on the daily time frame, we have price pull up and came down to take this lower low. Once it took this lower low, it grabbed some liquidity over here. As it took out this liquidity, what do we expect? Do we expect price to continue to move down, or we expect price to continue to move up? So I will expect price to continue to move up. Once it took out this low, I expect price to pull up and probably mitigate this supply zone and then go back right down. So now let's look at the other time frame. So we go to the 4-hour time frame. So we look at the 4-hour. What actually is the 4-hour doing? So when you look at the 4-hour, we have the same scenario just like the daily time frame. Price move, take out this low, and then it first gave us our choke, right? And then pull back, mitigate this demand zone, and then what? Move up again. And this is good. So as it move up, it pull back. So here gave us a internal break of structure. This is a small boss. So I'll be expecting price to pull back, mitigate this demand zone, then I'll probably look for an entry, right? And that is good. So this is a good sign that price is likely to continue to move up. Once it mitigated this demand zone, I'll be expecting price to pull back, mitigate here, and then move forward to this supply zone. Then there I'll decide whether I'll continue to hold the trade or I'll close the trade and look for sell to target this low. But now let's move into my media time zone. The 15-minute is my media time zone. This is the zone that I set all POI whilst waiting for price to mitigate this POI. Then I will look for my entry. For example, price came down, mitigated this demand zone here, right? Price mitigated this demand zone. Let's say it mitigated this demand zone and begin to pull back. As a pullback, it break a structure here. Once it took out this structure, what do I expect? I'll expect price to either pull back, and I would expect price to either pull back and mitigate this demand zone. This is my media time frame, and this is the time frame that whenever price react to any demand or supply zone that I draw, immediately price mitigate it, I try to look for my entry. For example, price pull back, and then we have internal break of structures. Price came out, take this structure, pull back, mitigate, and continue pull down, right? So I expect price to mitigate this demand zone. As I mitigate this demand zone, then I will try to look for an entry, a buy here. Why do I want to look for a buy? Because everything aligned that price is likely to move up. Because on the daily time frame, price confirmed that it will move up to this supply zone. Here on the 4-hour time frame, price confirmed that it gave us an internal structure. As an internal structure, I will not target to this zone. I will only target to this higher high here. And then that is why I came back to my media time frame to expect my entry. So here I do nothing until price pull back and mitigate this demand zone. So let's see, press price forward and see as it mitigates this zone. Price mitigated this demand zone. So now what do? I now move into my entry time frame, which is the 5-minute. Okay, so before I will enter for a trade, I always make sure that price definitely will take out some liquidity. And this liquidity I'm talking about, this is the lowest candle that's what break through. I will take this as my sweep of liquidity. This is the lowest. So price pull back and then give us this wick break, right? So I'll expect price to come down and sweep this wick break. As I sweep this wick break, I serve it as a liquidity. So now price already mitigated my demand zone that I drawn, expecting price to pull back and mitigate it. Priced it. Now what do? I look for the lowest candle wick. This is the wick. So I'll now wait for price to clear this wick. As price clear this wick, Now I'm ready to enter for the trade. This was the scenario. These are the rules I set for myself. So I go in for my, now as I go in for my buy, this was, so but usually if I want to go in for a buy or sell, for example, in this case, I usually wait for the first bullish candle. So this is the first bullish candle, right? As this is the first bullish candle, enter in front of this candle, the first bullish candle here, then I'll set my stop loss, so to the candle, and then give how many pips stop loss. I give 4. So now this is my stop loss, then I target, let's say 2. This is what I target, 2.5 or 2.6. this is my target. Right now I wait for price to move in peacefully. So go in and it's looking great, then I'm in the trade. Now I do nothing because I'm already in the trade, either win or lose. So price begin to move up, then come down, then move up, come down, move up. Then I saw that it was just not even going up, but it was really coming down seriously, and I got stopped out. This was a trade I took that I expected it to move up, but in trading you never, nothing is guaranteed. It's all about probability. This is what I expected, but no, the market said no, it's not moving in that direction. So I think this is a perfect trade that, to me, I will give it as A+ setup. But I got stopped out, and I don't understand, because of gold volatility or because of my lack of the skills. Actually, I'm still a beginner and I'm still learning it, but this surprised me. Do you know how much this trade cost me? Cost me about 2,000. That it wiped out everything. But the funny thing is, it's not real money. It's a demo trade that I'm still practicing. So imagine this was to be a real money. This would have been a disaster. Now see my recording. This is the trade. And one thing, this trade was over my trading time zone. Usually I trade between 9 o'clock to 9 o'clock a.m. to 3 p.m. But I took this trade around 4, which is outside my trading time zone. And also looking at it, this is another trade that I lost. And I see to it that I think it wasn't really the best. I think I need more practice. In order to preserve my capital, I needed to take gold out of this list for now, and then later I can come back to it. And this is the breakdown of it. So that is why I am walking away from gold for now. Sometimes the smartest move isn't about pushing harder, but it is about focusing. If you are a beginner just like me, spreading yourself across everything, you are trading gold, you are trading indices, you are trading crypto, you are trading 5 different pairs. Sometimes it can become confusing and it can make your journey longer. So our advice, cut what is disturbing and keep what is making you to become consistent. Once you are consistent, you can add whatever pair, indices, the crypto, whatever you want to add to your watch list, you can add it. So that is why I am documenting this whole journey, the wins, the losses, and every decision that I made along this journey. So if you are a beginner just like me, or if you are also in this journey, subscribe and follow along, and I will see you in the next video.